Good afternoon, everyone. This is Jason Hamilton, Business Development Manager at the Realty Medics. And joining me today will be Chris Rich, who is our outside sales manager. We're going to provide a 2023 market update for Q1. It's been a while since we've last done this. So without further ado, I'm going to share my screen and we're going to dive right into this. So in 2022, 318,855 people moved to the state of Florida. That was a 1.9% population gain. And Florida was the second most popular destination for U-Haul customers. Florida ranked fourth in state business tax climate index, and almost 65,000 New Yorkers alone moved to Florida per the DHS-MV. It was 61,728 in 2021. Now, we don't have a crystal ball on what's going to happen this year, but experts believe that other states will actually go faster than Florida will. For example, like Utah, Idaho, Texas, North Dakota, Nevada, Colorado, and then should be tied with DC and Washington State. A lot of new businesses moved to the state of Florida, specifically Central Florida. Here's a partial list. Not all these are major companies, but there were quite a few aerospace companies that moved to Central Florida as well, over on the Space Coast.
On this list is also a lot of expansion as well. It's not necessarily just new businesses moving as well, but companies that may have expanded or added locations.
Mm-hmm. So according to the Orlando Economic Partnership Study in 2019, Orange County, Seminole County, Lake County, and Osceola County, there's 2.5 million people that reside in these four counties, and that's 17% of Florida's GDP. Include Volusia, Brevard, and Polk counties, and it's 4.3 million people, which would be 20% of the GDP.
And the Orlando metro area is an important thing to note, because when we talk about the future numbers for Orlando, according to the to ORA, those are the four counties included in what is considered Orlando for real estate purposes.
Mm-hmm. I will finish off with this slide and then pass it over to Chris. But according to this partnership study, Orlando is still adding 1,500 people a week that are moving here. And from our own personal experience, our own portfolio, 7 out of every 10 applicants that we get are from out-of-state applicants. So the vast majority are moving here. And, you know, there's a lot of businesses moving here, but there's a lot of opportunities to work remotely now. So we'll see a big influx of people in the Ocala area, which is Ocala, Summerfield, Bellevue, Wildwood, Ocala. So a lot of small towns up there that are seeing people who do work remotely, have the capacity to do that. It's going to be cheaper for them. It's less saturated than it is here in Orlando. In terms of employment, there was 19% growth, which is 10 points higher than the national average. And we created 500,000 new jobs. Manufacturing jobs were up 6%, while other major metro areas were down 4%. And
let me just clarify that, Jay. That's this is the projections by 2030. All these stats are based off of this study that was done right before COVID happened. So a lot of these numbers are honestly probably low. They just haven't done an updated study, but they give you an idea of the future projections for the state of Florida, Central Florida specifically. What we're expecting to see, and then what we've seen, you know, post-COVID, that 1,500 a week number is probably low based off what we're seeing now.
Okay. And we're expected to outpace the nation in construction, healthcare, engineering, legal services, and computer design. Chris, did we get cut off?
Nope, I'm here. Everything's good on my end.
Our meeting got cut off.
Still showing on my end.
That's weird.
Still showing recording.
No. Saying join a meeting or sign in.
Let's just keep going. So obviously you're still here.
Okay. All right, do you want to take the slide?
Sure. So to keep going with what we're talking about as far as projection and growth, they found that 1 out of 18 new residents moving to Central Florida is from another country. And for the first time ever, we're going to see by 2030, seniors will outnumber children. The study specifically cites first graders at the time of the study. By the time they hit high school, will be outnumbered by senior citizens, which is going to create a lot of job growth in healthcare, need for healthcare jobs, nurses, things of that nature, and the infrastructure to support it as well. And they also predict with the number of people moving to the area, we'll need 29,000, more than 29,000 new teachers. So let's talk about we're going to go kind of area by area. Certain cities we touched on because of growth, both in the sale market and the rental market. Updates on areas that we're seeing a lot of people ask about. Median sale price of single family homes, a little over 353,000. Inventory as of a couple weeks ago, we pulled the Aura data, was at 4,000, a little more than 4,000 single family homes. Median sale price of a town home, condo, and a villa is 271,000. Year over year, January to January, sales are down 18%. But what's important to note is that we were so hot for the last 2 years with so many people moving to Florida, paying significantly over asking price, cash offers. Anyone who's tried to buy a house the last couple of years knows the struggle. So we're really just seeing that come back down close to what was a normal trajectory. As of yesterday, mortgage rates 7.08%. Days on market, January 23 compared to January 22, we're sitting at 57. We were at 32. Now, median rent in Orlando, all houses, is $2,182. That's up $32 from January of this year. It's up $68 year over year, February to February. And that's $82 more than national average, 4% more national average. But if you compare that to rental rates for an apartment, 2-bedroom apartments, a little over $1,900, 3-bedroom house, a little over $2,300. I'm sorry, apartment. So when you compare that to rental rates and houses, a lot of times the house may make more sense to rent at than an apartment. Next slide, please. So next couple of slides, we're going to talk about 2 big areas for investors. Palm Bay, tech center. Some articles I've seen referred to it as the new Silicon Valley. Median sale price in Palm Bay, 336,000. That's up almost 17% year over year, January to January. Real Wealth listed as the 12th best place to buy a rental property in the U.S. If you look at 8-year equity growth, 139%. 1-year growth year over year, 18%. Those are massive returns on investment for an investment property. 23% of the people, according to Zumper, are properties are rent or occupied. About 274 houses for rent at the time. Median rental rate on a house is almost $2,100. It stayed about the same last few months, near national average, but it's up $100 year over year, February to February. If you look at apartment rates, again, 3-bedroom apartments, almost the same as a house. A lot of people, if you're looking at renting in general, may look at a house as opposed to an apartment. Ocala is another big mecca right now for investment properties. Median sale price is only on the house is only $275K, but we're up almost 21% year over year, January. Real Wealth lists Ocala as the 11th best place to buy a rental property with an 8-year equity growth of 137%, 17% on a 1-year growth. Again, massive ROIs. Now, people ask why Ocala is not much out there. Other than the World Equestrian Center, there's a lot of big distribution centers. Amazon currently occupies a 617,000 square foot facility. It was a $50 million project that Red Rock Developments built with no tenant in place just because of the projected growth. Chewy.com has a 600 plus square foot facility there. FedEx has a distribution center there. AutoZone has a distribution center there, all in excess of 600,000 square foot facilities. Dollar Tree just spent $200 million on a 1.5 million square foot distribution center. So a lot of jobs coming from those distribution centers. And here's the keynote for investors. You're at a 54% renter occupied housing. And if you look at the median rate on a house, only $1,745 for a rental house. That's up $50 month over month. And it's 17% lower than the national average. So when Jay talks about all those remote workers, why would you go to Ocala? It's cheaper. People want to be in Florida. You're in a good location in the city or state. You're insulated. You're within 2-hour drives of 4 major metros in the state. And you see from an investment standpoint, up almost $100 year over year, March to March. Apartments, 3-bedroom apartments, renting $1,725. So you're close to, again, a house. If you buy a 3-bedroom house or rent a 3-bedroom house as opposed to a 3-bedroom apartment, you're paying about the same thing. So a lot of people would rather have that house than having, multiple neighbors within an apartment.
Yep. And to piggyback off what Chris is saying, Real Wealth listed Ocala as the 11th best place to buy rental property, but it's the 5th fastest growing area in America. So there's a ton of construction jobs as well.
So I saw Forbes recently cited Polk County as the fastest growing county in Florida, which was interesting to me because it's geographically very large and there's a lot of places that are it's very rural. But there's also a lot of land that was owned by one developer that he started selling off those plots. And Forbes, I presumably are ranking it based off of the number of new construction permits that were pulled. So a lot of new construction is going to be happening coming up in Lakeland in the foreseeable years, I see. Median sale price right now is almost $300,000, which is up 12.6% year over year, with a 45% renter occupied housing. Median house rents for $1,745. Again, looking at those numbers, you're getting a good ROI year over year. In this case, it's cheaper to rent a house by about $200 than it is a 3-bedroom apartment. So it makes a lot of sense. It's going to be interesting to see where Lakeland goes in the next few years. All right, Clermont. Clermont's a unique area from what we're seeing. Not a ton of housing right now, but there's a lot of construction going on as you move more west through Clermont. Price of the houses are not cheap, relatively speaking, from an investor standpoint. But you had good growth, over 12% year over year, about 29% renter occupied housing, but it's not cheap. If you look at the median rent on a house, you're looking at $2,600 a month. But year over year, we saw a massive increase, $238 increase in March renter rate for a house. 3-bedroom apartments at $2,200, which is actually down. So it's gonna be really interesting to see what the housing market does in Clermont coming up. Go ahead, Jay, you want to take this?
Yeah, you bet. So Winter Garden is really priced out of the market. You're not going to cash flow there, but the median sales price is $510,000, which is up 1.5% year over year. 31% renter occupied, and there's 122 houses on the market for rent. Median rent is almost $2,900, which is 38% higher than the national average, and up almost $400 year over year. But it's not much more expensive than an apartment. Winter Garden is just an expensive place to live in general. It's beautiful, just not a great community to buy an investment property in any longer. Oviedo is fantastic, but it's priced out of the market as well. It's located right next to us. We're on the Oviedo border. Median sale price is $580,000, which is up 43% year over year. Very clean, very safe community, A-rated school districts. If you ever wanted to buy there as a primary residence, it would be fantastic. Only 22% renter occupied and 99 houses on the market, but the median rent is about $2,400 and about $2,300 to rent a 3-bedroom apartment.
Yeah, definitely a great place to live. Not a great place to rent or buy an investment property.
Sanford is Sanford's kind of hit and miss. There's some nice areas of Sanford, also some very rough areas as well. But median sale price is $315,000, up 7.7% year over year. 49% renter occupied, so about half are renters. 152 houses on the market. Average house is renting for about 2,100, and just about the same for the apartment as well.
What's interesting with Sanford is depending on the part of the town you're in, the city, there can be, as an investor, a lot of opportunity for a flip of fix and hold if you get in the right area. There's also a lot of new construction in certain pockets of the city that are very close to lower income, lower quality neighborhoods. So if you are looking to invest in Sanford, make sure you're doing your homework with the areas and what's around the area. If you're not familiar with the area, don't hesitate to call us. We can kind of let you know where it's a good place to be, where it's a good place not to be.
Yeah.
A lot of people in Seminole County want to be in Sanford because it is a growing city. The historic downtown area is growing, lots of business, lots of events. I know a lot of people my age range in their 30s and 40s would rather go to downtown Sanford than downtown Orlando. It's just an older, I'm not sure what the right word is for it. It's just a classier, more older, laid back vibe than it is, downtown Orlando. But you still have a lot of breweries, a lot of bars, a lot of good restaurants. So a lot of people want to move to that area. So it can be a good place for investment properties as long as you have the right property.
Yeah. It also sits on the St. Johns River, which I believe is only one of 2 rivers in the world that flows northward. But if you are going to buy there, definitely scout out the area or get with us and we can walk you through it. Kissimmee has been a hot spot really since the market tanked back in 2008. A lot of California investors came in and bought up a lot of these homes because they were so cheap at the time. But I want to say that they were $50,000 a pop back then, and now you can see the median sale price is $335,000, up 8.6% year over year. 56% renter occupied. Kissimmee is a great rental market in its proximity to the parks. It's very close, so a lot of people work at Disney or Universal, or they can commute over to Lake Nona. They can still get to Orlando, so it's great for tenants, and it's affordable. Currently 463 houses on the market. My goodness. Median rent almost $2,400 for a house, and look at that, $1,725 for a 3-bedroom apartment. So a bit costlier to rent a house, but the market does pretty well.
We often get people calling in asking short-term rental versus long-term rental. Put it in perspective, there's a lot of long-term rental houses available right now, but there's total over 24,000 short-term rentals listed in the Kissimmee area. So just a ton of rentals. So if you are considering an investment in that, in that area, just know it's highly competitive. You have to do something to make your property stand out. On the long-term rental side, as you see, there's a lot of inventory to compete with. So just make sure you're doing your research if you're looking at buying an investment property down in that area.
Deltona has really become a great spot to invest. Actually, for the last number of years, 8 or 9 years. Median sale price is $285,000, up 31.8% year over year. They did recently put in an Amazon warehouse up there. It's located roughly halfway between Orlando and Daytona Beach, so you can commute one way or the other. It's kind of a bedroom community, but very affordable compared to living here in Orlando. 23% renter occupied, 115 houses for rent. We do have some people that work for the Realty Mex that do invest heavily in Deltona, so it's a good area. About $2,000 a month to rent there, which 5 years ago that number was $1,300 a month. It wasn't high rents at all, but that's up $88 year over year. And for an apartment, it's very comparable, $1,920 a month for a 3-bedroom apartment. So median home price for September 2022 is recorded. This is in Orlando, is recorded at $365,000, which is a decrease of 3.4% compared to August median home price of $377,000. Inventory rose 1.8% in September from 6,762 to 6,884. According to Tansy Soderstrom, which is part of ORA, the Orlando Regional Realtor Association, that's the president, we're starting to feel the impacts of rising interest rates on the Orlando housing market as they have more than doubled over the past 12 months. Cliff Long, CEO of ORA, says, although we're bullish and optimistic on the Orlando market nationally, economists are predicting a downturn. One of the things we're doing is making sure we prepare budgetarily to withstand any financial downturn. From a financial standpoint, we're making sure that we're doing a lot of conservative budgeting, but anticipating the ability to continue to grow. Real estate reflects the economy, it reflects the national economy, and the first 6 months of 2023 will definitely be an echo of what happens in Washington, DC, not state, with regards to policy and the availability of money, especially as it pertains to Florida. Rising insurance costs plus the increase of interest rates are definitely going to be squeezed on housing. Fortunately for Florida, the popularity of moving to Florida has not waned, but the availability of money from lenders, the rising cost of insurance, those things will definitely have an effect on home sales. We wanted to say that we have a great deal of real estate investors because of our vacation market. Obviously, you know, we don't do vacation rentals, but it is a viable option for some people. Because of our short-term rentals, because of Disney, because of Universal and that tourist pocket, Orlando gets its healthy share of investors from Brazil, investors from South America, UK, Canada, and so we have a third leg that many other cities don't have because of those investment dollars coming from abroad. We tend to have much more healthy outlook on the real estate market. We haven't had the indicators yet that the international buyers will fall off. And just a side note, they're building a 40,000 square foot facility for the Orlando Regional Realtors Association. So, you know, obviously they're optimistic that things will continue to go well.
And on that note, Jay, the last 2 years throughout Central Florida, you had on average in the Orlando market north of 25% appreciation in the last 2 years. So you have massive growth from people moving down, housing prices going up, people from other states selling way more expensive houses and then moving down here and paying 30, 40, 50 grand over asking. Really drove up the market rates and the appreciation. So just coming back to a normal, because that is not happening. You know, all those people kind of died off for the most part.
So we pulled the 25 fastest growing places in the US list, and this is how many were actually in Florida. At 25, we had Orlando, 15 was Tampa, 14 Jacksonville, 12 Melbourne, 9 was Naples, 8 Daytona Beach, 7 Port St. Lucie, 6 Ocala, 4 Fort Myers, 3 Sarasota, and 2 Lakeland. On that list, in Central Florida specifically, we have Orlando, Tampa, Melbourne, Daytona Beach, Ocala, and Lakeland. So quite a number of on this list for the fastest growing places last year. And Orlando was the 10th fastest growing city or metro area in the US. 3rd fastest metro area, the Orlando, Kissimmee, and Sanford area. Is this your slide?
Yeah, just basically showing how regardless of whose study you're looking at, you're seeing a lot of the same cities in Florida popping up at different points on the list, whether it's a top 20, top 25. Orlando's on the list. You're seeing the same cities in Florida on the list. So the ranking to me doesn't really matter because you're seeing the same cities on the list. Just driving home that point that Florida's growing, Central Florida's growing. And despite, a lot of the apprehension from people about the housing market, maybe nationwide, Florida's been pretty much insulated. As far as I've been involved in real estate in Central Florida, it's been an abnormality for the most part. And Jay, you've got a lot more experience than I do. You can echo that sentiment.
Yeah. Agreed. Yeah. So the top 10 places to invest in real estate this year, we've got Orlando, you know what? I'm going to preface this. I would disagree with a lot of this list, and we'll chat about it. But Orlando, Davenport, Haines City, Kissimmee, Windermere, Clermont, Winter Garden, Groveland, Mineola, and Lakeland. Orlando, by and large, is probably going to be too expensive, so you're going to have a hard time cash flowing. Davenport's great. You got the proximity to it's next door to all the theme parks. You will be, there's a lot of short-term properties there as well, but Davenport's good for long-term. Haines City rents are going to be on the lower side. Kissimmee's always been good. Windermere is going to be too pricey. That's a lot of money out in Windermere. That's where Alworth is located. Tiger Woods, Ken Griffey Jr., ton of celebrities live out there. But Clermont, we spoke about that briefly earlier. It's it's kind of an up and coming area. There's newer construction out there. Could be a good possibility. Winter Garden, again, too expensive. Groveland and Mineola are out west. It's kind of a hike out there. There's a lot of land, probably still pretty affordable to buy. And then Lakeland's intriguing because traditionally it wasn't maybe the greatest spot to invest, but it's growing and it's halfway between Tampa and Orlando. So over time, that area is going to expand.
It seems like a good time to, since you brought it up, what exactly is the goal? Are you already in a property with a good mortgage rate, good mortgage payment, where it makes sense to keep the house and turn it into an investment? Or are you buying a new property solely for an investment? Because that's such a big factor. If you're already in a place where it's expensive to buy a house now, Clermont, for example, with a high median sale price, it's not going to make a ton of sense to buy a rental property in Clermont. You can probably buy two of them in Ocala for the same price. Mm-hmm. But if you're already in Clermont and you can keep your current house and create a new primary, rent your current house, then it may make a ton of sense based off of where the rental rates are for the house. So that's really where this list can change depending on what the situation is for each individual person.
Right. And if you are looking at potentially buying another property, we do have a lot of new construction opportunities still. We can set you up with our broker, Tommy. He's got new construction in Ocala and in Palm Bay. So two great areas. Mentioned earlier, Ocala is the fifth fastest growing area in the country, but Palm Bay back in 2020 was the #1 place to invest in the US. That was according to Bigger Pockets. And that was echoed in 2022 by, I believe it was US News, maybe US News. #1 place in the country to invest.
And I recently was on a trip with some investors, and there's one who's a local resident of Melbourne looking to invest in that area. And she was talking about how the healthcare system down there is so taxed just because the infrastructure is getting so overloaded with so many people moving that they're going to soon have to add more healthcare facilities to account for the number of people moving in. So that's a big indicator for me that the growth is not stopping anytime soon. Mm-hmm. Once we start seeing those facilities get built, I think it's an even stronger indication of the growth in the area coming up.
We've mentioned it on other webinars, but Palm Bay, the big draw there is the Space Coast and the aerospace industry. There's more than 100 different aerospace companies right next door in Melbourne, Florida. So they command a lot of six-figure salary, people that are coming here, and they need places to live. So there's a lot of new construction down there. I know a lot of people are investing in Palm Bay, but Ocala is another viable option as well. I think that is it. If you do have any further questions, you're more than welcome to come to Chris or myself, jason@therealtymedics.com or chris@therealtymedics.com, or just give us a phone call. We'd love to chat with you and make sure we get answers to any questions you had. Appreciate you joining us.
Have a great day.
Bye now.